Hello guys, how are you doing today? Hope you are fine. Today I want to show you this trade that I made on gold. Although it is a failed trade, as you can see what the price action offered right here at exactly 8:30 New York time. Okay, I still want to lay emphasis on why I took the trade, notwithstanding that I got wicked out during the news, during the yesterday's news. I think it was unemployment claims. Okay, this was the time that it came out, 2:30 p.m. Nigerian time, 8:30 a.m. New York time. Okay, so I want to make a shout out to the ICT in the person of Michael Huddleston, the inventor of ICT and the ghost in the machine. This setup right here is what you can see in his mentorship program 2022 episode 3. So if you want to learn more about this setup, you can actually go into his YouTube channel and surf to the episode 3 of the 2022 mentorship. Okay, it is titled Internal Range and Market Structure Shifts. So that is why I actually want to lay emphasis on. I will also show you where this trade worked. Okay, so the basis of this analysis is to first of all go down to your 5 minutes or 15 minutes chart, and exactly what you are looking for is you are looking for a break of structure that has a swing high like this. It doesn't matter how small the swing high is, just make sure that the break of structure happened first. It will help to validate this point of internal range liquidity when price goes above it. All right, so the basis of this analysis is to first of all find where price will break the structure, and this swing high came because it was broken, right? This swing high here was broken with this bullish candle. So what you will do when you see this kind of model is to mark out your swing high and draw it out with your any tool that you use to mark out a position or a level on your chart. Okay, just like this. As you can see, price kept on to respect this level. You see, price respected this level, showing you that this is a very valid level of support that price will tap into before going up. So basically, what validated this level as a level of support is this low that was taken out here. So the first step is to drop to your 5 minutes chart. There is no need of being afraid of trading on the 5 minutes chart. Okay, it is actually going to make trading easy for you, and forget about what people tell you about the noise and stuff. Okay, the 5 minutes chart is where the institutional traders operate from. They operate on the 5 minutes chart. They try to take immediate liquidity and sweep to the side that they want to go. So your 5 minutes chart and 15 minutes chart is where you should be dropping if you want to take intraday trades like this, and I can assure you that this works all the time. Okay, so once price broke this internal range liquidity after taking out this break of structure, which you can see that price consolidated for a while in this box right here and eventually swept liquidity. Of course, if you are aware and know more about the power of trade, you should know that what happened here is accumulation. There's another accumulation, and this right here is your low risk entry. This is the first entry that you would get from the market. All right, it is low risk entry. That is what you're seeing. And once you have noticed this price action, you can now set a limit order to buy on this order block or on top of this bullish market structure shift or internal range liquidity. All right, so there was actually a change of markets, a change in character right here, and then the markets came to tap into this area of demand. Remember that this is This is a kind of a bullish institutional orders waiting to be filled on this block. So once price came in here again, it took it out, and minus the news, this would have been a very nice trade, but as you can see, the news made them to sweep furthermore into this low of break of structure. But if you notice, it is just a week of the candle. The candle actually went higher to close above, telling you that this is a very strong level to buy from. All right, so if you actually missed the entries, you can find your way. You can find your way around the chart. So this is a failed trade actually, but I want to demonstrate an instance of when this was a winning trade. Let us use Bitcoin as an example. So this trade I took on BTC, which is a winning trade, as you can see, there was a break of structure right here, and once this happened, I chose this swing high as my internal range liquidity. I think I should take this off. I took this swing high as my internal range liquidity. Always remember that your bias is the most important thing in the market. Okay, you have to know where the market is going. And once I knew that the market was going higher, and I saw that institutional traders have set their orders to buy on this block, all right, I set my limit order to buy from this level. It's very simple. Just know the bias, know where the price is delivering price to, and you are good to go. So let us go down to this time frame again so that I will show you more of what I mean. So what happened here? Price broke structure to the downside. We are still working on the 5-minute chart. Once price broke structure down here, this swing high is where you would refer to as the change of market structure or the internal range liquidity, which was eventually taken out by this high. And if you observe, there was a kind of a consequent encroachment to the middle line of this horizontal box. Price respected it. Why? Because this point or level in the chart has been validated by this sweep of market structure or break of market structure to the upside. So once it has been validated, this point acted as the point of support to take price up. And if you observe and look closely, price repeated exactly the same thing right here. How did it do it? This point of reference also, if you want to mark it out, you can actually mark out maybe the high of this the close of this red candle, any point. So just make sure that you are not making the space too much for you not to know the exact point. The smaller, the more concise and more accurate it is. Okay, you can observe that price used this point of reference as support. It came down and respected it once more. Okay, so let's go back to this place. Once price came down here, it broke structure to the upside right here. Broke structure to the upside right here. So that point is now our buy side liquidity, right? That's our buy side liquidity. So whatever trade you are taking here, you are aiming for this buy side liquidity, which was formed during the process of this price action. So what now happened? Price came here one, respected it twice, respected it thrice, and now started to show us footprint that it is willing to go higher. And that is exactly what you should be looking for, the footprint of the market. So immediately price showed us this institutional leg that okay, we are willing to start taking price higher from this level. That is what the institutional market do. They will always show you where they are willing to take orders from, and on this red block right here, is where they intended to take price from. All right, so basically what you just have to do is to place your orders right here and your stop loss on this swing low. Remember to manage your risk properly. So when price tapped into it, you would use this buy side liquidity which it formed when it was making the legs higher as your point of take profit. And as you can see, the trade was a winning trade, and it is a 3.61 risk reward trade. So that will be all for this video. If you want to learn more, if you want to see this video broken down more, I will suggest you go to the ICT YouTube channel to check it out. Okay, so until next time, please share this video and subscribe to my YouTube channel for more enlightening trading tips like this. Have a good one.